This is the Asia Trade. I'm Paul Allen in Sydney. We are seeing President Trump delivering some remarks from the White House at the moment. We have live pictures from the press conference, which is ongoing. The president just taking a few questions from reporters there. It has been a wide-ranging press conference. A number of things have been raised here. Trump has said we're talking about a tariff of 10% on China. This is based on the fact that they are sending fentanyl to Mexico and Canada. And in terms of Mexico and Canada, he says he's planning 25% tariffs there to start in the coming weeks. He's also said he's thinking of a trip to the Middle East soon. He's considering to have those tariffs I mentioned on China begin as soon as February the 1st. So a bit of a reversal from some of the comments that we saw yesterday. President Trump saying that he's also likely to impose sanctions on Russia if President Vladimir Putin doesn't come to the table soon to negotiate on Iran, to negotiate on Ukraine. So he says he's going to be talking to President Putin, quote, pretty soon. He says that the EU and NATO should increase their defence spending to 5% of GDP. That's up from the current 2% target, so a familiar tone there as well. Let's get some more context here now and get to our political news director, Jody Schneider, who is in Washington. So, Jody, another wide-ranging press conference here. What are some of the key takeaways so far?
Well, Paul, this started off as an announcement, really. It was viewed as an announcement of a big investment. Earlier in the day, it said it was going to be a massive infrastructure announcement, but an investment in AI and related services by the heads of Softbank, OpenAI, and Oracle, who all were at that the remarks in the Roosevelt Room by the president, and they each gave a little speech. And then we turned back to Donald Trump, who then took questions and had a wide-ranging, as you can see, press conference on a number of issues. He talked about tariffs. Tariffs, as you might recall, were really not in his inaugural speech yesterday or even in some of the other speeches he gave during his inauguration day. He mentioned China, but he didn't really talk about tariffs. Tonight he said he's looking at 10% tariffs on China because of fentanyl, sending fentanyl to North America. And that is also why he wants to impose tariffs on Canada and Mexico. He's saying as much as 25%, and that will take place around February 1st, which is something he did say yesterday. He also talked about, there were questions to him, as expected, on the pardoning of 1,500 people who partook in that riot at the Capitol on January 6th of 2021, 4 years ago. And he defended pardoning them, saying that it was actually in defense of democracy that he was pardoning them. It was a good thing for democracy and the rule of law in that they hadn't, he mentioned some of them hadn't done so much, and that he thinks that they were their rights were being intruded upon by the sentences they were given. Of course, violent crimes were committed at the Capitol that day, and that was a lot of the source of the questioning. Should those people be allowed to be free when they had been convicted of violent crimes? The president withstood those questions, basically took the stance that they needed all to be pardoned. There's only, I think, 8 sentences that were commuted that they're still looking at, but 1,500 were pardoned.
Well, one of the big news events of the day was his mention of that Stargate project. That is the $100 billion investment in the AI projects that you mentioned, and that could scale as well. What's been the immediate reaction to that, and have we had any more detail in this press conference?
We didn't really hear a lot of detail. We heard from the three heads of those companies who were involved in this. It was very jovial. They were, saying how happy they were to invest in the U.S. Some numbers were thrown around. The question in these kind of situations always is, Paul, is this a new investment, or is this investment that they've already started in the U.S.? How much will be moved from other investments? But the dollars do sound large, and Donald Trump has promised to try to work with technology leaders to have them bring their investment to the U.S., including foreign-based companies.
One of the other big pieces of news that we're all waiting on really is whether or not President Trump is going to have a phone call and perhaps later a meeting with the Russian President Vladimir Putin, because it was a campaign trail pledge, of course, that he would end the Ukraine war very, very quickly. Have there been any remarks on that?
Yeah, yesterday he did not mention Ukraine in his inauguration speech, interestingly. At a kind of press event last night where he did a lot of these signings of these executive orders, he did mention that he wanted to try to get out of Ukraine. He said, again, he repeated that had he been president, this war, during this period where they went to war, that it would never have happened, and that he wants to see it end. He thinks it's in Ukraine's best interest to end it, and he thinks it's in Russia's best interest to end it, saying that Russia has lost a lot of people and a lot of money in that war. He didn't say that he would necessarily meet with President Putin. He did say that he wanted to try to do that, and he wanted to try to set something up. And there's been some reporting that there are talks in the works for them to meet, perhaps at another location on the sidelines of another summit.
All right, Bloomberg political news director Jody Schneider there, and President Trump saying that he'll meet Putin anytime that he wants. It has been a broad-ranging press conference, as we mentioned, veering from topic to topic. There have been a few more remarks about China here. President Trump saying he didn't talk much about tariffs in his recent conversation with China's Xi Jinping, saying that Xi, quotes, knows where I stand. He also says that the 10% tariff on China would be related to the importation of fentanyl through Mexico and Canada. So that is something of a reversal of what we heard yesterday. Our chief North Asia correspondent, Stephen Engel, is in Hong Kong now. Steve, we seem to be getting whiplash from some of these news headlines regarding tariffs in China. Where are we heading here?
I still think the tone is fairly warm in the opening days of the Trump administration 2.0, simply because, the tariffs on trade were not announced in detail, nor was a timeline given, other than the new Trump administration will instruct the agencies, the various agencies, to basically explore the efficacy of those proposed tariffs, upwards of 60% on Chinese goods imported into the United States, as well as kind of do a review of China's commitments and also China's fulfillment of the trade, phase one trade deal that Trump was able to strike with China in his first term. So buying time for both the United States to come up with a solid tariff plan on China, as well as China to react. So this 10% that Trump was talking about now is separate. This has to do with the fentanyl and border issues that, let's say, in public optics, both China and the United States, in particular Biden and Xi, when they had that summit in San Francisco, agreed to work together on that issue of limiting the precursors of fentanyl into the United States. So that is separate. So I still think the tone is warm right now. Take in example is the vice premier speaking at Davos. He had to say this. Well, first of all, let me just say that he is first pledging to import more, and that China is not aiming to have a trade surplus. That is something they've said quite a bit. But he also warned about the rise of perceived protectionism. Here's what Ding had to say.
Economic globalization is not a you lose, I win, zero-sum game, but a universally beneficial process where all can benefit and win together. Admittedly, economic globalization will bring some tensions and disagreements on distribution. These issues can only be resolved in the process of promoting economic globalization. Protectionism leads nowhere. Trade war has no winners.
And for now, a trade war, at least as framed in the specter of tariffs, has been delayed for now. But also, Donald Trump was talking yesterday about he plans to meet and have calls with Xi Jinping, perhaps as early as this year. Who knows when that might happen? He's also talked, as we just heard from you, Paul, that he could be having talks as well with Vladimir Putin. He could be heading to the Middle East at some point this year. So there's a lot on his plate. So we'll have to see where Xi Jinping fits into his busy agenda. But one other issue that is kind of suggesting that ties are warmer, Beijing's foreign ministry spokesperson yesterday saying they're willing to work, obviously, with now confirmed new Secretary of State Marco Rubio. Marco Rubio has been sanctioned twice by Beijing, I believe back in 2020, for his comments on Beijing's dealing in Hong Kong and Xinjiang, and also pushing for laws to punish Beijing. So Marco Rubio is sanctioned, but Beijing is saying we're willing to work with him.
Yeah, and China's not just reaching out to the US. We're hearing that Xi's also spoken to Vladimir Putin after President Trump's inauguration. Do we have any idea what was said?
Well, we can get the readout from the Xinhua news agency, and essentially Xi and Putin held a video call that lasted some 95 minutes on the day after the inauguration, so I'm assuming earlier today, to quote-unquote deepen ties amid external uncertainties. That's obviously what's happening in the United States, for one. Xi says he's willing to work with Putin to take their bilateral relations, China and Russia, to quote-unquote new heights. Now, of course, they already struck that no-limits partnership in the week or so before Russia's invasion of Ukraine back in 2022. So what does new heights mean? Probably more economic aid, as the two countries have definitely strengthened bilateral economic ties. She says both sides should deepen strategic cooperation or coordination. So we'll have to see how that plays out.
All right, Chief North Asia correspondent Stephen Engel there. Right, let's take a look at our markets tracking at the moment. We've been open here in Australia for 15 minutes. Some modest upside here, a little bit better than 0.25%. Seeing some declines for Woodside Energy, though. It's off by 2.1% at the moment. It's even though production guidance is going to be a little bit weaker on 2024 output. Still around the midpoint of the range, however. Sales revenue for Woodside also slipped 6% on 2023, so those shares a bit weaker at the moment. Nikkei futures, though, in positive territory. We've got the yen hovering around 155, though we've seen some currency movements since President Trump started delivering those remarks a short time ago at the White House. The offshore yuan getting a bit weaker after Trump made remarks on tariffs, potentially 10% tariffs on China, nothing to do with the trade surplus that China runs, more to do with the fentanyl that's entering the US through Mexico and Canada. So the yuan getting a little bit weaker on those remarks that Trump is mulling 10% tariffs on China. All right, let's get to Fred Neumann now, Chief Asia Economist and Co-Head of Global Research at HSBC. In terms of what we've just seen this morning, Fred, the year of the snake is meant to be the year where we embrace uncertainty. We didn't get tariffs yesterday. It looks like we've got them today. What's your reading on how the US-China relationship evolves from here, and how do you see China countering any potential impact from trade policy?
Well, there's, of course, plenty of relief right now that we don't have the imposition immediately of tariffs by the U.S. on the imports of goods from China. And there's a bit of a hope here that we could get the two sides talking in the coming months. Maybe there might be an opening here to blunt some of the biggest tariff increases if indeed a deal can be struck. But the risk is not off the table. And just as we heard just a short moment ago, a 10% tariff might still come because of fentanyl, for example. And even though we haven't seen an immediate imposition of tariffs, they're certainly not off the table for the year of the snake. And so China will still need to brace for potential tariffs, and that's going to slow down exports this year. It comes at a very difficult time for the Chinese economy. And there's not much really that China can do apart from trying to negotiate to kind of avert that a particular trajectory that we have currently underway.
Yeah, well, we did also hear from the Chinese Vice Premier saying that China will expand imports to promote balanced trade. So there seems to be certainly a willingness to work this out on both sides. But China's got domestic problems as well, obviously, around the property market, consumption and deflation also. Do you see 2025 as being the year that China emerges from deflation?
It's still a long way to get out of deflation. Maybe towards the second half of the year, we see some indicators turning more positive again, but it will require quite a bit of stimulus. We need to get the consumer spending again in China. That requires stabilization of the property market. It would require more fiscal spending. So there's still a long road to go. The other thing that was interesting with the comments by Vice Premier Ding this morning is that he's also trying to reach out to other countries in terms of trade, saying that maybe least developed countries may not face tariffs when exporting to China, trying to work with other economies. So the strategy here is negotiate with the U.S., trying to keep other trading partners on board and try to do as much as you can domestically to revive growth. But on all fronts, I think China has its work cut out for itself, at least in the next several quarters.
Well, you've been attending a series of staff and client meetings this month to kick off the year. What's the sentiment around not just China, but Asia's other major economies in 2025?
Everybody's looking across the Pacific and seeing what signals we get out of Washington. No, tariffs is only one thing. The other thing is still worries persist around how much inflation is there in the U.S., how quickly can the Federal Reserve lower interest rates, what does this mean for the dollar and therefore Asian currencies and Asian central banks. So at the beginning of the year, the square focus is on the U.S. and not just on the trade policy, but domestic policy as well. Beyond that, I think there is some slight optimism coming in here that maybe we have kind of averted the most acute imposition of tariffs, that there's still room for negotiation. That's certainly reflected in how markets have traded in the last few days. And there's a bit of a hope that maybe in China we will get more stimulus come through. But it's the U.S. at the moment that sets the tone for global macroeconomic policy, and that will likely stay the case for the next few months.
Yeah, well, the Trump inauguration has seized a lot of the headlines this week, but we do have a major central bank meeting coming up on Friday. It is, of course, Japan, and we've got traders seeing 90% chance, or it may even be higher than that now, of more tightening this Friday. Now, what's your view of the path ahead for policy normalization in Japan?
Well, most indicators suggest that monetary policy should or can be normalized further. Inflation is on the right trajectory. The labor market is on the right trajectory. Growth is expected to be rebound this year, partly because consumers are coming back. So it's a question of tactical timing for the BOJ, not whether they will hike, but when they will hike. And so this Friday seems as good day as any to hike after the volatility that we've seen at start of the year. Maybe that will hiking now will provide a bit of a support for the Japanese yen as we head into potentially more volatility into the coming months. So this Friday seems like to us at least that it's a likely hike, and we know that the BOJ after last summer's surprise maybe doesn't want to catch the market too much off guard, and so we get a bit of a hint here from officials that really a rate hike is on the table. So Friday is a go for us. But of course, what happens in the next 24 hours may well push the decision one way or the other.
Yep, embrace the uncertainty, as you say in your report. Fred Neumann, Chief Asia Economist and Co-Head of Global Research Asia at HSBC. Still to come, Netflix shares are soaring after the company added nearly 19 million subscribers. It was a record quarter. We'll have more on their outlook next. This is Bloomberg. Let's take a look at how Netflix shares are tracking after hours, better by more than 14%. Big jump there. It closed out 2024 with its biggest quarterly subscriber gain in history. The streaming giant benefiting from its first major live sporting events and the return of Squid Games. So for more, let's bring in Bloomberg's Lucas Shaw. So are we seeing here, Lucas, the impact of some of these very popular shows with fans, or is there more at play here?
You know, it's hard to know fully what accounts for 19 million subscribers in a quarter for Netflix. They've never done that before. Their previous best was 15 million. That was the beginning of 2020, the pandemic, when their subscribers were just booming. And then it seemed like a crazy number. You have to figure the Mike Tyson-Jake Paul fight played a big factor. That attracted a lot of attention. Same with other live events like the NFL and WWE, the wrestling. But their executives all said that it was broad-based, right? They don't want to attribute too much to any one thing. So they had a hit movie, they had the return of Squid Game, they had several other popular TV shows in multiple countries. It's just a company that's firing on all cylinders at the moment.
Yeah, so almost 19 million subscribers added in the fourth quarter, but that's the last time we're going to see that number. Netflix says it's going to stop reporting subscriber growth, wants the market to focus on other more traditional metrics like revenue, sales. People love this number. How are analysts going to react to this?
The response to them no longer reporting hasn't been very good, right? To your point, this is how analysts and investors and us in the press we in the press have measured them for the longest time, right? How quickly are they growing? How many people are they adding every few days? You know, I understand why they are no longer doing it. You know, they'll say because other metrics are important. I think it's also because they've gotten so big that they know that there's only so many people that they're going to be able to keep adding, and they're going to be focused on trying to make more from the customers that they do have through price increases, which they announced more of today, through advertising, which is probably the biggest priority, through new initiatives like video games. But look, they will continue to update us when they cross certain thresholds. They haven't said what that will be. Does that mean 350 million is the next big one, 400? I don't really know. It's a real loss in terms of transparency and trying to figure out what's happening with the company. But hopefully we can use revenue to give some good estimate for where they're at going forward.
Yeah, and we lose an important metric as well in terms of measuring churn. What's Netflix been doing to improve stickiness, to keep those subscribers sticking around?
Well, look, their churn is industry leading, right? That's the rate at which people are canceling. I think the U.S. number is sub 2%. I've seen similar reports to show that it's about the same globally. Most of their competitors have churn of 4 to 6 to 8, even 10%. You know, industry average, I think, is at 4 to 6%. So that's one thing that they're really, really good at.
All right, Bloomberg's Lucas Shaw there on those Netflix earnings. Record subscriber growth in the fourth quarter, and we're really seeing those shares pop after hours. Stay with us. We have more ahead on the Asia trade. This is Bloomberg. All right, just got some data coming out of Australia at the moment. It is the Westpac Melbourne Institute leading index. This is a composite indicator. It predicts future economic activity in Australia. Although inactivity might be a better description here, the index for December showing a modest contraction of 0.02%, and that was after pretty much a flat reading for the previous month as well. So the Westpac leading index indicating some pretty quiet conditions in terms of growth in Australia. Let's take a look at how we're tracking on Forex markets, because it had been a pretty quiet day for the US dollar up until about 30 minutes ago, which is when President Trump held a media conference at the White House. And during that conference, he mentioned that he's mulling 10% China tariffs. This has nothing to do with the trade surplus. This is everything to do with fentanyl finding its way into the US through Mexico and Canada. So after he made those remarks, we saw the greenback surge against all of its G10 peers. We've got a much weaker yuan on those remarks as well. The yen currently trading 155.71, and we got an Aussie dollar at 62.5 US cents. The euro, meanwhile, pretty much becalmed, but parity one of those things that's very much on everyone's radar right now. Okay, let's talk a little bit more about Trump's move to delay other tariffs on China. That's signaling a potential thaw in relations between the world's two largest economies. So in an exclusive interview to Bloomberg in Davos, IMF Deputy Managing Director and former PBOC Deputy Governor Min Zhu said that he sees room for China and the US to work together.
The Chinese says you not only listen to what the people say, but also what people do. I think is more important. Fundamentally, and there's a lot of mutual interests between the U.S. and China, and we can work together. I think the benefits is much, much bigger than we fight to each other, become one winner, one loser. We even don't know who will win, who will lose, right? So it's a clear equation there. So I think President Trump understands that. So I think it's good for U.S., good for China, good for the whole world. If we can looking for a chance to work together, I think that's great. There's many areas working together, right? The trade area is a big issue. Investments is the second big issue. And the drug issue, Tiffany issue is also very serious issues. And beyond those things, and we can working for the global public goods. And although President Trump don't mention that much, but as a leading economist in the world, it's all area working together. So I think it's good. I think he understands the situations. He wants to see whether we can work together. That's good.
Is your view actually too optimistic? I mean, maybe it's not 60% tariffs, maybe it's 50, 40, and it's just a matter of when Trump imposes those tariffs.
Yeah, you never know, right? For Trump, the unpredictability is the key issue. We don't know, right? But I think the starting point is good, right? If he's looking for the cooperation with China side, I think there's many things on the table we can talk about that. So that would be good. So we're moving that positive way, move forward, is to give the positive signs for everyone, right? So I think this is good enough already. We will see how things goes, right? For China, we experienced Trump 1.0. When Trump launches 3.01 against China, it's really out of the blue, right? We don't know. So it's a hurt trade. The China's export to U.S. tariffs increased from 3.7% in average to today's 20% now. It's pretty high, right? And capital market also in 2018 that year dropped quite a bit. We did a study found very much linked with the trade policy as well, right? And Chinese company start to move to third place. So it does have impact, but we learned a lot of things, trade diversification for China's, and the company also try to build a more resilient supply chains as those things. So I think in these days, we'll see how things goes.
We've been talking about how China is more prepared this time to respond to U.S. tariffs. What do you think are some of the tools China can tap for that? How do you see China responding should those tariffs come?
Yeah, I think the responding, the most important thing is to do our own thing better, the first. You know, as Americans say in Texas, clean your own house, right? So the first things that we do is we do the stimulus policies, stabilize the market, boost the confidence. I think those are the most important things, right? Then stick on a few key issues. For example, emphasize on domestic consumer market, emphasize digitalized manufacturing, and emphasize carbon neutrality transformation. So we want to make sure our strengths, the competitiveness is there. So I think that's the most important preparations for whatever things that happen, right? So it's not action, reaction. You don't want to get these visual cycles. It doesn't yield good things.
That's IMF Deputy Managing Director and former PBOC Deputy Governor Min Zhu speaking exclusively with our colleague Haslinda Amin at the World Economic Forum in Davos. And President Donald Trump gave China's stock market a pleasant surprise by not announcing any tariffs on the Asian nation on his first day in office. Investors, though, are not resting easy. For more, let's bring in our China correspondent, Min Lo. So, Min, can you walk us through the market moves in China after day one of the Trump presidency?
Yeah, you just heard Min Zhu earlier striking quite a positive note on this reset of relations, if you will, between U.S. and China. And investors yesterday really pretty optimistic, especially in the offshore market. You look at the Hang Seng Hang Seng Index was up 0.9%. Hang Seng China Enterprise Index up 1.2%, but response on the mainland onshore markets, though a little bit muted there. Investors appear to be shrugging off what has transpired in the first day in office. And we have seen, for example, the big moves in the Canadian dollar, the Mexican peso after Trump announced those 25% tariffs on Canadian and Mexican goods. And it looks like now investors are still a little bit cautious about putting money into China, given markets have not yet appropriately priced in tariff risks. This uplift we're seeing in markets likely to be quite short-lived, although some hedge funds that Bloomberg has been speaking to say they're using this opportunity to load up on Chinese equities, hoping for some sort of technical outperformance, at least up till the 2 sessions in March. But certainly going forward, we'll be watching very closely what transpires in terms of negotiations around tariffs, Trump's potential visit to China in his first 100 days in office. But volatility is going to be a common feature in the markets going forward.
Yeah, and domestically in China as well, problems continue, particularly around the slow-burning property crisis. We've heard now that UBS has joined other banks in halting margin loans on New World securities. This does not exactly sound like a vote of confidence.
Yeah, UBS is joining a number of other banks, including HSBC, Citibank, that has halted accepting New World stocks or bonds as collaterals for margin loans. And New World is, of course, this property developer owned by Hong Kong billionaire tycoon Henry Cheng, and it is being very closely watched given its high leverage. And this is a company that has recently offered about $15 billion worth of properties to refinance loans that are maturing this year and next year. They're essentially pledging some 20 properties valued at about twice the amount of their loan. So this is certainly going to assuage those lenders, but it does mean that it leaves behind less assets for unsecured bondholders who have been selling off New World's bonds, some of these bonds falling into deeply distressed territory. So something to watch going forward, although New World is saying that it's not in any discussion of debt restructuring for now. But certainly something to watch, just as Vanke as well is set to pay its coupon payments today, and also another bond that is maturing, 3 billion yuan bond maturing next Monday. So a lot to watch in the property space as well.
All right, Bloomberg's China correspondent Min Lo there. Saudi Aramco CEO Amin Nasser thinks that China's still driving growth in global oil demand. Speaking exclusively to us in Davos, Nasser dismissed concerns about consumption peaking in the world's biggest energy user.
We're still seeing good demand coming out of China. We've seen it in 2024. We still anticipate, as I said, most of the growth, the 1.3 million, 40% of that growth will come from China and India. The rest is coming from the rest of the world. As I said, China, even when you talk about their move into electric vehicles and renewables and all of that, they need feedstock to create the material that will be used in these electric vehicles and these carbon fibers and all of these things.
Other stories from the corporate front. Indian software services company HCL Tech says AI is still driving growth. Speaking to us at Davos, company chair Roshni Malhotra told us more about rapid changes in the sector.
I think till last year when we were all here, everybody was talking about AI and everybody was talking about work in progress and pilots. And I think today there are a lot of companies who are deploying AI in digitization, in their tech solutions, and much more vertical specific. So I think that will continue to drive and fuel growth.
Apple loses its crown as the world's most valuable company after its stock closed at its lowest since November last year. The drop erased more than $110 billion from the company's market cap, causing it to fall behind Nvidia. Apple was downgraded to underperform at Jefferies and a hold at Loop Capital due to weak iPhone sales in China and a tepid consumer interest in its smartphone AI. Bloomberg has learned that Meta is working on upgrades to its smart glasses and exploring new wearable devices such as watches and camera-equipped earbuds. And that's as it aims to embed its AI features into more products. Sources say Meta is developing Oakley-branded smart glasses for athletes this year, while its Reality Labs group is also planning new high-end glasses with a built-in display. Apple's president and CIO, Ruth Porat, says the US isn't guaranteed to maintain its lead over China in the race to develop AI. She's urging the Trump administration to enact what she calls bold and responsible AI regulations that do not discourage investments. She spoke to Bloomberg at the World Economic Forum in Davos.
To date, the U.S. is ahead in models. We're probably a year plus ahead in models. The West is ahead in chips.
More ahead on the Asia trade. This is Bloomberg.
Climate change is still on top of the global agenda. From decarbonizing to nature-based solutions, from building a circular economy to developing nature credits, the Paris Agreement continues to be the best hope for all humanity. So Europe will stay the course and keep working with all nations that want to protect nature and stop global warming.
That's European Commission President Ursula von der Leyen at the World Economic Forum in Davos. Now, she was speaking after President Trump's order to take the US out of the Paris Climate Pact, underscoring the new US administration's push to immediately overhaul US energy policy. So let's bring in Bloomberg New Energy Finance Global Head of Environmental Markets, Kyle Harrison. So Kyle, what's the impact of Trump withdrawing the US from the Paris Accords?
Thanks, Paul. It's largely symbolic, right? It's important to note with the Paris Agreement that while it is legally binding, it is a voluntary framework, and countries aren't necessarily held accountable if they don't achieve their emission reduction goals. What it is a big blow to morale, right? So you're removing the world's second heaviest emitter from the negotiation tables when it comes to climate change. And for some of those other large, heavy emitting countries that are pulling their weight when it comes to decarbonization, it could necessarily, or it is a bit of a bad look for them. I think the important factor to think about here is that the U.S. technically cedes some of its climate leadership when it comes to deploying low carbon capital. And specifically, it's ceding that leadership to competitors like China, who all of a sudden have a much larger voice and a much larger seat and a louder voice at the climate negotiation tables. So I think those are the largest impacts.
We're obviously having a lot of conversations around potential tariffs from the Trump administration. Is there any kind of impact that we might see from those on global renewable energy markets?
Obviously, a lot of kind of questions remain unanswered when it comes to tariffs. Naturally, what it's going to do is it's going to mean exporting key renewable energy technology like PV modules, wind turbines, and battery technologies. Exporting those to the United States is going to become more expensive. And what you could see is that key trade partners with the U.S. historically on these technologies, they might start using some of these technologies domestically, but they also might find new trade partners. What you could also expect to see potentially is new trade partners with the United States emerge as a result. And then I think one important final point to make here, Paul, is that while tariffs will make some of these technologies more competitive, or more expensive, it doesn't necessarily make them uncompetitive. And you can use the example of historic tariffs that the U.S. has imposed on China. So, for example, on battery technology, it's still cheaper for domestic project developers in the United States to import battery technology from China, even with tariffs, than developing those technologies themselves. And so it doesn't necessarily kill these markets in other parts of the world.
Beyond Trump, trade's had an impact on carbon markets in the Asia Pacific and beyond as well. So what's the latest in carbon market developments in Southeast Asia, and what's driving this?
So I think lost in a lot of these tariff discussions is potential talks of a carbon border tariff. And we already see something like this called a carbon border adjustment mechanism in the EU. So if companies want to continue, or countries want to continue trading with the EU, they need to ensure that the products that they're exporting have a lower carbon intensity. And that's starting to have a snowball effect on markets across Southeast Asia, for example. So historically, large countries like Indonesia, Vietnam, and Malaysia, they were large exporters of carbon credits to companies around the world. They're now starting to look inward, though, in response to this carbon border adjustment mechanism in Europe. So they're creating their own carbon taxes and emissions trading systems domestically in order to go ahead and ensure that, for example, cement, steel, and aluminum that they're producing and trading to the EU, ensure that those have lower emissions. So if the US were to go ahead and implement some type of similar border tariff, that snowball effect could grow larger and really impact markets across Southeast Asia and other parts of the world.
So what's driving demand for carbon credits in Southeast Asia, and do we see that dynamic changing?
Yeah, again, so historically, when a lot of these countries were exporting carbon credits, the biggest driver of demand was large corporations. So, multinational companies like Shell, like Volkswagen, Delta Airlines, they were going and they were buying these carbon credits, typically from nature-based solutions like forestry, in order to go ahead and achieve their sustainability goals. But now, if these countries were to go ahead and start implementing their own domestic carbon markets, it's going to start to impact domestic companies more. So heavy industrials, airlines, for example, power companies that operate in Indonesia, Vietnam, Malaysia, Singapore, they're now going to have to go ahead and start to decarbonize faster, or they're going to be impacted by these domestic markets.
All right, Bloomberg New Energy Finance Global Head of Environmental Markets, Kyle Harrison there. Thanks for joining us. Some of the other stories that we are following on renewables and energy. China says it's achieved its 2030 renewables target 6 years early. The National Energy Administration says a record 277 gigawatts of solar power was added last year. Now, the rapid addition of solar capacity came despite a tough year for the industry as a supply glut caused huge losses for leading manufacturers. China also added nearly 80 gigawatts of wind power. The world's biggest maker of EV batteries, CATL, says earnings last year rose as much as 20%, with net income expected to reach $7.3 billion. And that's despite a likely first sales drop since it began reporting 10 years ago. Now, the company's benefited as smaller rivals struggle to adapt to falling demand for EVs outside of China. Fortescue Executive Chairman Andrew Forrest says there is a financial model to stop the burning of fossil fuels. He also spoke to us exclusively in Davos after President Trump made a US exit from the Paris Climate Accords in one of his first acts in office.
What you can measure, a financiable model, is simply stopping the burning of fossil fuels. Put all that money you saved in the bank. Banks will lend against those savings. And there is a financial model to stop the burning of fossil fuel. Now, I know that doesn't go well with the current parlance coming out of Washington, D.C., but I don't care. I'm a global business person. I have to build projects. I have to raise capital.
Well, let's check in on some of the Aussie stocks that are moving. Want to focus in on the energy and materials space, which are the only two sectors that are in negative territory at the moment. Bit of a mixed bag here, though. Woodside Energy slipping 2.1%. Woodside was out with production numbers today for the fourth quarter. Sales revenue did grow 3.4% on year, but the forecast production for 2025 of 186 to 196 million barrels of oil equivalent, perhaps a bit of a disappointment for the market there. Take a look at the uranium producer. Meanwhile, Paladin Energy rising more than 6%. Uranium for the quarter production was pretty much flat. Sales also slipping as well, but it sees year forecast 3 to 3.6 million pounds of uranium. Evolution Mining, the gold miner, also popping about 2/3 of 1%. We did have Evolution out with production numbers as well for the second quarter. Gold production coming in line with estimates. Look, if you think gold is expensive, you want to check out the price in Aussie dollars. It's just below $4,400 at the moment, so not a bad time to be an Australian gold producer. We have more ahead on the Asia trade. This is Bloomberg.
So we do expect them to go 25 on Friday. After that, we think BOJ is going to continue to raise, but it's going to be very slow, very cautious. The policy that they've had in place has been in place for a very long time. They're cautious about disrupting the markets. When they first started raising rates, there was a pretty big market impact. So I think we're going to see the very slow but steady and cautious approach. But yes, we think rates will go up, and we see a terminal rate of around about 1%.
As Nomura's head of wholesale, Chris Wilcox, speaking to Bloomberg in Davos. Well, we've got Japanese markets opening at the top of the next hour. Got some names for you to watch as well, because, of course, we did have that announcement from President Trump, the Stargate project. This is a $100 billion initial investment, which may scale to $500 billion over the next 4 years. The immediate beneficiaries are Softbank, Oracle, OpenAI, so keep an eye on Softbank at the moment. We might also see some moves for the likes of Renesas, Tokyo Electron, Laser Tech as well. So some names to watch there in the AI space when we get going. Softbank there, you see the last close was off by about 1/3%. So we will keep an eye on Softbank, because they did confirm their participation in that Stargate progress, $100 billion initial investment. We also saw currency movements earlier in this hour. The US dollar had a pretty quiet day up until President Trump made remarks that he might put a 10% tariff on China. Nothing to do with the trade surplus, everything to do with the flow of fentanyl into the US. And we saw the US dollar gaining against all of its peers. We've got the yen there at 155.77. We saw a bit of weakness in the yuan as well. But stay with us. Market opens in Seoul and Tokyo coming up next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens as we're still trying to digest right now, Paul, all of the different pronouncements, actions, and comments just coming from President Trump on day two. Of course, the biggest one right now, especially when markets are trading with headlines, the 25% tariffs on Canada and Mexico, and now an additional 10% on China, perhaps coming as soon as February 1st.
Yes, President Trump promised a flying start to his second term, and he's delivered so far. We've also got that huge announcement on AI investment to consider as well. $100 billion could scale up to $500 billion over the next 4 years, Shery.
Yeah, we're watching Softbank very closely because, of course, we had already heard about those investments in the United States. President Trump calling Masayoshi Son his good friend Masa at that press conference. We can see Softbank not trading at the moment, but we had seen some downside pressure in the previous session. We are also contending with news that an Indonesian startup company, the Softbank backed, actually faked most of their sales. So we'll be watching how that stock moves at a time when we've seen already AI-exposed stocks, that ETF trading in the U.S. at a 3-year high. Take a look at the Nikkei, up 0.8%, and the topics also gaining ground. We're seeing a little bit of weakness for the Japanese yen. The expectations for a rate hike of 25 basis points on Friday, but there are concerns that perhaps because the 25 basis points has already been fully priced in by the markets, will we see some downside pressure once the rate hike actually comes? Take a look at how Korea is also trading. We are now hearing that Korea will be offering 5-year bond auctions for retail investors. We have seen Korean bond yields down across the curve already. Of course, we've been following those global rate moves. We've seen a little bit of pressure on Treasuries, global bonds, because after that relief rally that we saw, we continue to hear more about potential tariffs, more perhaps on inflationary risk. The Kospi gaining 0.6%, Paul.
Well, we've been trading here in Australia for a little bit more than an hour now. Mostly a positive day here on the ASX. A couple of sectors lagging, though, namely materials and energy as well. We've got weaker currency due to some of the announcements that we had from President Trump pushing the dollar higher. But if we take a look at what's happening in the bond space here, we've seen yields continuing to back off a little bit after that recent surge. I mean, we don't have any data. There's no Fed speakers at the moment, so bond investors really seem to be zoning in on what isn't happening in terms of those tariffs being delayed. They were seen as inflationary. China's also expressing a willingness to import more goods to address trade surpluses. So potential warming of US-China relations may be calming things down a bit. If we take a look also at some of the remarks that the president has been making, we have been talking about this Stargate project. It was flagged a while ago, but we got more detail today. $100 billion initial investment. The beneficiaries, as we mentioned, Softbank, Oracle, OpenAI. This could get bigger as well. Let's have a listen to what the president had to say.
Announcing the formation of Stargate. So put that name down in your books, because I think you're going to hear a lot about it in the future. A new American company that will invest $500 billion at least in AI infrastructure in the United States, and very, very quickly, moving very rapidly, creating over 100,000 American jobs almost immediately.
Bloomberg Intelligence Senior Tech Analyst Mandeep Singh joins us with more on this investment. Mandeep, good to have you with us. When it comes to SoftBank's commitment, we had already heard Masayoshi Son speak to this when he visited Mar-a-Lago last month. So what changes have we seen so far, and did we get any more details on how this money will be deployed?
Yeah, look, I mean, this announcement, the partnership that SoftBank has now with Oracle, and, the fact that they are deploying this in the U.S., I think that was an interesting component that, look, all these hyperscalers, we know they have spent about $240 billion in 2024. And now think of it as additional, $100 billion that will be invested in building compute capacity. And all of it is going to OpenAI. So I think that puts them at a big advantage in terms of the foundational model players when you compare them to Google or Anthropic or Meta. And I think it has ramifications in terms of how OpenAI will be able to pursue scaling laws in far better scale than probably some of its competitors.
Yeah, and we also heard from the president intending not to roll back some of the Biden administration's initiatives in the AI space. What are we hearing there?
Yeah, so I think that was around the safety rules. And look, I think President Trump, he's focused on AI infrastructure, and the safety aspect is more to make sure that these companies continue to stay ahead when it comes to developing the foundational models, especially given the competition with the Chinese foundational model companies. And I think today was just an indicator that compute capacity, which was a constraint in 2024, he's trying to alleviate some of that. So all the supply chain companies, whether it's NVIDIA or Micron, or anyone who is part of that data center supply chain, stands to benefit from this incremental $100 billion, which think of it as another sovereign buyer. U.S. government is behind this another entity that they have created, and they are one of the biggest sovereign buyers in conjunction with the hyperscale companies that are investing their capex in data centers.
Mandeep, does this also pull away capital from perhaps other parts of the world that could have led in this AI boom? And what does it mean when it comes to also regulatory scrutiny and the power that would be concentrated in developing this technology in the U.S.?
Yeah, look, I mean, the leading foundational model companies were all U.S.-based. What we heard the whole of last year is they were supply constrained when it comes to both training these models and deploying these models. And what this does is really kind of make sure that OpenAI, which is the leading foundational model company, has more compute capacity when it comes to training its models on bigger clusters. And so to me, that's the profound kind of step here in terms of really making sure that U.S. has the most compute capacity, and that capacity isn't deployed elsewhere outside the U.S. So, I mean, NVIDIA, if it's making, 2 million GPU units, a big portion of that allocation will get deployed in the U.S. with this announcement.
All right, Bloomberg Intelligence Technology Senior Analyst Mandeep Singh there. Let's get back to our markets. Our next guest cites downstream AI applications as one of her top conviction calls. Joining us from Hong Kong now is Vicki, Asian Equities Portfolio Manager at Robeco. Vicki, I just want to get your reaction to that big investments announcement that we heard from President Trump today. If you're looking for downstream AI opportunities in Asia at the moment, where do you go shopping?
Indeed, it's still an exciting time with more and more support behind this whole development, which makes a lot of sense from President Trump's perspective. So the Asian technology supply chain, the semi-supply chain, has already behaved very, very well last year. So that would continue to support these stocks. But for me, I think in 2025, we're really standing at an inflection point of potentially a lot more interesting applications coming through for the users of AI. So we're looking to further monetize this trend to bring more applications that didn't exist before to the consumers in 2025 and 2026. So many of the software companies in the region should stand to benefit. Last year, we've seen some developments that's behind the scene in terms of using AI to increase productivity on the corporate side. But this year, increasingly, we're going to see consumers feeling the change as AI coming through.
Well, we saw a pretty decent rally for the Hang Seng Tech Index on Tuesday, another 2.4%. That's up 6 days straight now. In the context of these sorts of announcements, do you see this trend as being sustainable?
I think there are two folds here to answer this question. The first side is that some of these applications, so the market is obviously going out to look for the next biggest beneficiaries that are on the AI side. At this moment, it's still not very clear. So I think that's when you make the best investments, when the consensus has not fully set on who will be the biggest beneficiary. But they're definitely coming through. As we know, a lot of companies have been investing in these big models, and we're waiting for the applications to come through. On the other hand, the strength underpinning the Hang Seng Tech has also been coming from an excitement in semiconductor supply chain in China, the hope that some of these companies can make more profits because the sanctions on AI from the US to China came through from President Biden. That is going to probably not be very sustainable in my view, because in this tariff negotiation with China and the US coming closer to each other and willing to negotiate, one of the major ways for China to reduce the trade surplus with the US is to buy more. And technology is an important area where China really still wants to buy more from the US. So if there is any deals being made on that front, then many of these China domestic supply chain would have to rethink what is the value that they can still get, because obviously the most competitive products at this moment in the semi-supply chain is still from the United States.
Right now, we're seeing Softbank gaining more than 5% for its best day since the month of early November. And this, of course, on the news that we're seeing those investments made in the U.S. on artificial intelligence infrastructure. But Vicki, of course, one of the hurdles for these big tech giants in the U.S. when it comes to earnings season was how lofty their valuations are, especially with the fact that perhaps the applications for AI are not as wide or as not concrete as a lot of people watching these stocks we're expecting them to be. Could those be issues that Asian tech companies could also face this year?
Absolutely. I think that remains to be a risk. We talked about that before when I came onto Bloomberg. I think the question is not whether AI is going to drive productivity growth, is going to drive this paradigm shift. I don't think there is a question there. But how much do we pay for it is really the question. So we're seeing that a lot of the stocks that are not fully valued to their AI potential start to perform better than a lot of these very, very well-known stocks. So coming back to stock selection, I think the most important thing is this trend is there, but the winners are still changing. So it's not certain that there's going to be one or two winners in this race. And I think in 2025, the trend probably still stays strong, but the risk is in the most highly valued companies where expectations are too high. So indeed, we still need to be very aware of earnings differentials and find those companies that have potentials that's not yet fully priced in.
And what about the risk of more tech bifurcation, given, of course, the news right now about more tariffs, and, of course, we have these export controls as well. We have seen the readjustment of supply lines for redundancies already in the past few years, but will additional cost pressures hamper these companies?
Cost pressure is definitely an issue for the downstream companies. So again, that emphasizes the importance of pushing out mega apps on the AI downstream front. So I think we're really getting very close to the point where we're going to see a lot of these apps coming through. So some will succeed, and a lot of companies are very well positioned to really capture this new demand, this change of consumer behavior yet again. On the other side, I think the most important question for the semi industry is also to cost down. So not to forget that this is a highly cyclical industry, and cost down has been something that's always on the back of the mind of the semiconductor supply chain. So we need to be careful of structurally inflated expectations on earnings. These are very cyclical companies in the end, and a lot of investments have been made. And what's reasonable to expect is indeed to cost down.
Vicki, good to have you with us. Asian Equities Portfolio Manager at Robeco there with the latest on what to expect in the broader space of tech and AI. Still ahead, we talk carbon capture and decarbonization strategy with the Japan Financial Services Agency. But first, despite a surprisingly warm start to relations with China, President Trump now saying that his administration is still considering a 10% tariff. More on those comments next. This is Bloomberg.
We need to jointly uphold and practice true multilateralism. Multilateralism is the right way to maintain world peace and promote human progress. It is the golden key to solving the difficulties and challenges facing the world. International affairs should be decided by all through discussion, and the future of the world should be determined by all countries together.
Chinese Vice Premier Deng Xuexiang speaking at the World Economic Forum in Davos. U.S.-China relations seem to have gotten off to a relatively warm start with Trump's return to the White House, even as Trump is now talking about a possible 10% tariff on China being enacted on February 1st because of the flow of fentanyl from the country. For more, let's bring in our Chief China North Asia correspondent, Stephen Engel, who joins us from Hong Kong. And Steve, I mean, we're still trying to figure out if we're going to actually get a honeymoon period in Trump's presidency, right, between these two leaders. Where's the goodwill meter pointing at now?
I think we need a graphic made up for that. Where is that goodwill meter? Yesterday, it seemed to be pointing pretty high because Donald Trump did not really set a timeline for those promised or threatened tariffs of upwards of 60% on all Chinese goods to the United States, giving China a bit of a reprieve at a time when the Chinese domestic economy is struggling. I mean, Donald Trump said he and Xi Jinping, more recently in their phone call, didn't talk much about tariffs, but clearly Donald Trump taking a little bit of more of a conciliatory tack to get on the right page with China, probably going into negotiation mode. He's instructed his agencies to essentially conduct extensive reviews on the efficacy of his tariff plan, as well as the efficacy of that Phase 1 trade deal that he signed with China in his first term. So there's some time that has been bought for both sides, no doubt. So that has created some goodwill. And we've heard some comments from the vice premier as well in Davos, essentially saying that they're going to buy more goods, particularly from the United States, and that they do not have the ultimate goal of basically holding on to a trade surplus. So they're saying all the right things right now. Also, Donald Trump essentially gave a reprieve to TikTok, even though ownership of that is going to be in question, considering that ByteDance and Beijing simply have not wanted to sell. But if the law in the United States dictates, so be it. And also we're hearing that Donald Trump saying, hey, Elon Musk and even Larry Ellison of Oracle could be potential suitors in partnership, a JV with the U.S. government. Min Lo, the China correspondent, will be back later to talk more extensively about that. Also, we're hearing from the Chinese Ministry of Foreign Affairs that they are willing to work with Marco Rubio as the now confirmed new Secretary of State. Of course, Beijing has sanctions on Marco Rubio for his comments on Beijing's crackdown on Hong Kong as well as in Xinjiang, and Marco Rubio's pursuit of laws to punish China. So, again, the Ministry of Foreign Affairs said it's necessary for high-level officials of both countries to maintain contact in appropriate manner. So there is some goodwill right now, but again, we'll have to kind of wade into this new tariff comment from Donald Trump today, saying that 10% threatened tariff on China over the fentanyl issue is on the table and could be enacted by February 1st if there's not action. So it's not all smooth sailing for U.S.-China relations in the opening days.
Yeah, some good signs, though, as you say. But, you know, China's not just reaching out to the U.S. We're hearing that Xi Jinping's also spoken to Vladimir Putin after President Trump's inauguration. What was said? What's the readout?
Yeah, well, that's to be expected as well, because, look, Xi Jinping essentially locked arms with Vladimir Putin back, about a week before the war in Ukraine began in 2022. And I'm not saying he's doubling down on it, but the readout from Xinhua news agency is saying that Xi and Putin held a video call after the inauguration of Donald Trump to deepen ties amid, quote unquote, external uncertainties. Xi is quoted as saying he's willing to work with Putin to take their bilateral relationship to new heights. They already have a no-limits partnership. Now it's going to go to new heights. Xi says both sides should deepen strategic coordination and cooperation. That being said, Trump is also saying in that impromptu press conference as well today that was supposed to be centered solely on AI and that deal with Larry Ellison and Masayoshi Son. He says he's considering sanctions on Russia if Putin does not come to the table regarding Ukraine and possible peace talks. He says he's willing to speak with Putin anytime Putin wants. So stay tuned to this as well.
All right, Chief North Asia correspondent Stephen Engel there. Let's take a look at how Softbank shares are tracking in Tokyo. Pretty well after that announcement from President Trump about we have Project Stargate, $100 billion initial investment for Softbank, Oracle, OpenAI that could scale up to $500 billion over the next 4 years. The market very much liking this news. Softbank now up by almost 8%. We have more ahead on the Asia trade. This is Bloomberg.
So we do expect them to go 25 on Friday. After that, we think BOJ is going to continue to raise, but it's going to be very slow, very cautious. The policy that they've had in place has been in place for a very long time. They're cautious about disrupting the markets. When they first started raising rates, there was a pretty big market impact. So I think we're going to see the very slow but steady and cautious approach. But yes, we think rates will go up, and we see a terminal rate of around about 1%.
Nomura's head of wholesale, Chris Wilcox, speaking to Bloomberg in Davos. The consensus right now is for that 25 basis point rate hike coming from the BOJ. So markets have fully priced that in. What does that mean if it actually get that rate hike on Friday? Could we get that downside pressure to the Japanese yen, sort of sell the news narrative there? But right now we're holding at that 155 level against the U.S. dollar, while the Nikkei is being propelled higher by Softbank right now, gaining the most since September, of course, on those AI investments in the United States. The 10-year yield holdings a touch below that 120 level. We'll continue to check the bond markets broadly because treasuries remained higher, but they were hit by all that talk around tariffs, especially the 10% on China. Paul.
Let's take a look at how crypto assets are tracking as well. Of course, the Trump administration seen as being very crypto-friendly. A little bit of weakness there, but Bitcoin's still above, well, just below 106,000. But we've had some news on that front. There's a name you might know, Ross Ulbricht, who also known as the Dread Pirate Roberts, the founder of the Silk Road online exchange. He's going to be freed after serving 11 years of a double life sentence. Obviously, Silk Road became a haven on the dark web for trading illicit drugs, but the crypto link, well, of course, Bitcoin was used to finance many of those transactions. So for crypto advocates, this will be seen as a win. Bitcoin fans have long championed a campaign to free Ulbricht, and this is something President Trump latched onto as well, saying that he would free Ross Ulbricht on day one, and he has been good to his word. We've heard from Ulbricht himself saying last night, Donald Trump pledged to commute my sentence. Thank you, thank you, thank you. After 11 years in prison, hard to express how I feel at the moment. Shery.
And Paul, really President Trump's pronouncements and actions, just broad commentary coming from the White House now has really moved markets. We have seen European stocks gain ground overnight. We're seeing futures of 0.3% for the US stocks 50. It was really around those luxury goods makers. We're talking about the likes of Hermes, LVMH as well. Of course, we haven't seen immediate tariffs on China, although, of course, as is usual for President Trump, he did mention and comment on potentially 10% tariffs coming on China. But for now, there seems to be broad optimism about growth policies coming from the administration. This is Bloomberg. Take a look at some of the movers in the South Korea market right now. We're seeing a little bit of a mixed picture for those entertainment companies. Companies related to Netflix's Squid Game and other Korean drama and movies. We've been watching them because Netflix just posted its biggest quarterly subscriber gain in history. The U.S. streaming leader adding 18.9 million customers in the fourth quarter. For more on Netflix earnings, let's bring in Bloomberg's Chris Palmieri, who leads our media and entertainment coverage. Chris, we're talking about more than double what Wall Street had expected. What led to this surge?
Yeah, I mean, just their best quarter really since the pandemic, when everyone was stuck at home and signing up. You know, there's been a number of initiatives over the years. You know, they introduced the lower cost advertising supported tier, which has attracted new customers. They've cracked down on password sharing, so you have to get an account for your family members outside of the house or friends. But the biggest thing here, the story really is content. The last few months in particular has been a push into live events. We had 2 NFL games on Christmas Day. We had the Tyson-Paul boxing match, which outside data suggests was a huge subscription generator for them. And things like the second season of Squid Game or that. Just they're really hitting it out of the park in terms of things people want to watch.
One piece of news we got from this, though, was, well, the subscriber numbers were very impressive, but that's the last time we're getting that metric. The market really, really likes this metric. What's the analyst community saying about that?
Well, nobody's particularly happy about that. The idea here is Netflix is saying we're not going to give out quarterly numbers. We'll share them occasionally, but we want you to focus on sales and earnings like would other companies, and not the sort of quarter-to-quarter subscriber numbers, which has been an issue in the past. They would give forecasts and miss or beat their forecasts, and the stock would move based on that rather than these sort of other underlying fundamentals.
And so how have they been doing in other metrics, like the buildup of their advertising business?
Advertising's been going slower than perhaps some people anticipated, and they've acknowledged that. But the other big thing driving the stock, and probably today and tomorrow, is a price increase that they announced. For example, here in the U.S., it's going to be a $2.50 increase on their non-ad supported tier. So that's a pretty big jump, and that's all flows to the bottom line. Billions of dollars potentially globally on these price increases. So that also sort of indicates confidence that management has in its ability to hang on to subscribers and its
and its film and TV slate for this year.
All right, Bloomberg's Chris Palmieri there. President Trump says he'd be open to billionaire supporter Elon Musk or Oracle's chairman Larry Ellison buying TikTok as part of a joint venture with the U.S. government.
Are you open to Elon buying TikTok?
I would be if he wanted to buy it, yeah.
On your inauguration.
I'd like Larry to buy it, too. I have the right to make a deal. So the deal I'm thinking about, Larry, let's negotiate in front of the media. The deal, I think, is this. And I've met with owners of TikTok, the big owners. It's worthless if it doesn't get a permit.
All right, for more, let's bring in our China correspondent, Min Min Lo. So, Min, tell us more about the potential suitors, who's likely to be interested. And I think I saw a headline before that Mr. Beast would be interested in a piece of TikTok as well. Right, what's going on?
Yeah, it's interesting how things are turning, because yesterday when Trump was signing the executive order, I remember he was saying that Elon Musk is too busy sending rockets to space to be able to help him implement this executive order. But now he's saying he's open to Elon Musk as well as Oracle potentially being involved in this deal. As you said, Mr. Beast, that is the highest paying and the most followed internet content creator. He is joining a group of high net worth individuals, a group of investors assembled by a tech entrepreneur. They are making an all-cash bid for TikTok. And of course, as you can see on the screen, that is a group formed by billionaire investors Kevin O'Leary and Frank McCourt. They have long expressed their interest to buy TikTok, and they're willing to do so without buying the underlying algorithm, which has been included by Beijing into this export control list. And then, of course, there's Elon Musk, there is Oracle and Amazon, two companies that already work with TikTok. They have been floated as potential suitors. Other tech mega caps like Meta, Google, these two companies have been mired in antitrust lawsuits, so they're not likely to be potential suitors here. So it's we'll have to watch and see how negotiations go and how this turn out. And of course, there's also the idea that TikTok isn't willing to sell, so that could potentially complicate the situation as well.
Yeah, it seems like a very complex landscape. So how likely is that we could get a deal within the 75 days deadline?
Yeah, so here's the thing. The court has upheld that rule, which says that the foreign owners of TikTok have to carry out a, quote, qualified divestiture. And actually, the president does have some leeway in determining what exactly is a qualified divestiture, although he has faced opposition from lawmakers wanting to see a full divestiture rather than a 50-50 joint venture. But a 50-50 joint venture will likely find a way to satisfy the Chinese government as well as U.S. interests, because I've spoken to some tech analysts. They were saying that some of that national security concerns, they have already been addressed by TikTok's Project Texas that was proposed by TikTok. Although it was rejected by the Biden administration, TikTok went ahead to implement it anyway and ring-fence U.S. data on U.S. soil. All that concern around TikTok's underlying algorithm could be a little bit overblown as well, given that these content-pushing algorithms have already become mainstream technology, and TikTok's value lies more in its network and its amazing user interface. And of course, if Trump can orchestrate this, it will be a big win for him. If Xi helps him win that, it will be a big relations win for President Xi as well. So there are not many reasons for both sides not to go ahead with this deal, because China really does have bigger problems to worry about. Those threat of tariffs is an overhang on the Chinese economy as well.
Bloomberg's China correspondent Min Min Lo there, as it's been really interesting to look at that Trump 2.0 administration with President Trump cozying up to Silicon Valley, right? I mean, we have seen those tech giant leaders really being front and center during the inauguration of President Trump's second term. We have also seen global tech leaders flock to Washington, D.C., including Softbank's Masayoshi Son. Take a look at that stock, gaining the most since September. Softbank joining OpenAI and Oracle to fund AI infrastructure in the United States, aiming to deploy $100 billion immediately and increase to at least $500 billion in AI projects. And Paul, the president, calling Masayoshi Son, Masa, his good friend.
Well, let's get to some other tech stories that we're following. Apple loses its crown as the world's most valuable company after its stock closed at its lowest since November last year. The drop erased more than $110 billion from the company's market cap, causing it to fall behind Nvidia. Apple was downgraded to underperform at Jefferies and a hold at Loop Capital due to weak iPhone sales in China and a tepid consumer interest in its smartphone AI. Bloomberg has learned that Meta is working on upgrades to its smart glasses and exploring new wearable devices such as watches and camera-equipped earbuds. And this is as it aims to embed its AI features into more products. Sources say Meta is developing Oakley-branded smart glasses for athletes this year, while its Reality Labs group is also planning new high-end glasses with a built-in display. Alphabet's president and CIO Ruth Porat says the US isn't guaranteed to maintain its lead over China in the race to develop AI. She's urging the Trump administration to enact what she calls bold and responsible AI regulations that do not discourage investments. She spoke to Bloomberg at the World Economic Forum in Davos.
To date, the US is ahead in models. We're probably a year plus ahead in models. The West is ahead in chips.
And up next, we talk decarbonization and sustainability efforts in the region with the Japan Financial Services Agency. This is Bloomberg. Tokyo Gas President Shinichi Sasayama says the company will look for more opportunities to invest in the U.S. following a series of acquisitions it's already made. In an exclusive interview, Sasayama told us they're hunting for a variety of potential investments, not limited to upstream assets.
Among our overseas businesses, North America is an especially important growth market for us. We think the key is to make investments across the entire value chain, not just in upstream assets, but also mid and downstream. While we refrain from disclosing the exact amount, we believe that these are still promising investment targets going forward.
We have seen some other countries trying to buy or thinking of buying more from the United States when it comes to shale gas in order to try to appeal to the new administration. Is that something that you're looking at as well?
We already have contracts with the United States to purchase LNG. We will compare with other projects and assess whether the pricing and flexibility is better.
We have seen activist investors here in Japan being very busy, especially with Elliott Management, for example, taking a look at your real estate assets. Have you decided what to do about that?
Our real estate business is not simply about real estate. We place great importance on ESG-oriented property. Combining real estate assets with an energy system that promotes resilience will increase the value of that property or land. This is where we want to concentrate our efforts.
What sort of message you want to send when it comes to activist investors that want to see more returns from your company? Are you talking about potentially looking at some assets that you might be open to selling?
There are many investors and shareholders who appreciate our company. It's important that we enhance the corporate value for all our shareholders. To that end, growth investments are crucial, and it's important to consider the sales of assets with low capital efficiency.
Of course, President Trump has already lifted a moratorium on new U.S. licenses to export liquefied natural gas, and we've also seen him withdraw from the Paris Climate Agreement. Let's take a closer look at Japan's efforts in promoting and funding decarbonization. Joining us now in Tokyo is Satoshi Ikeda, Chief Sustainable Finance Officer at Japan's Financial Services Agency. It's great to have you with us today, especially at a time when we're seeing really renewed focus on fossil fuels and perhaps a turn away to the green transition coming from the United States and the new Trump administration. How will this impact the world's fight against climate change?
Well, certainly. Well, Japan has developed our own green transformation plan, which plan to source diversified sources of energy from different sources, including nuclear, certain part the fossil fuel, but also renewable energy. So we have been trying to kind of reconcile that the certain call from the certain environmentalist to completely overhaul the energy system, but with a certain kind of consideration for the livelihood and the cost of living issues. And so making kind of practical and realistic and pragmatic the energy transition plan for net zero. So in that sense, well, I would say that our green transition plan, or energy transition plan, is intact.
Intact even with a pragmatic approach, especially when it comes to dealing with some world trends and forces that may veer more towards fossil fuels?
Well, we would say that, as I said, that our plan is a diversified energy sources for Japan's economy. And certainly we do include some plan for carbon capture for certain fossil fuel use. So, well, maybe we need some modification or adjustment, but the basic direction of our energy transition plan, I would say, will be unchanged, I would say, yeah.
Restarted, I think, 14 nuclear reactors since the Fukushima disaster. How important is it to get the rest of the country's reactors up and running again to help Japan meet its clean energy targets?
Right. Well, we are right now revisiting our energy target. It's right now a plan to include some nuclear energy in overall energy plan. So, well, with the certain consideration for the Fukushima incidents, but making nuclear safeguard against such incident, and to make sure that the nuclear will continue to be a safe energy in the future, to ensure that energy transition to net zero.
I understand Japan's going to issue some more green bonds this month. How's the demand picture for these looking?
Well, I think there is a huge appetite for the green bond. And also, we do issue a transition bond, sovereign transition bond, and which has been well subscribed so far. So, well, I would say that there is a continued appetite for such financial instruments.
When it comes to corporate reform, especially including these sustainability goals, how open have financial asset managers been so far? We have heard globally some of these global financial institutions have been retreating from some of those climate institutions.
Right. Well, I'm not sure that how they would respond in the end, but because there are some financial institutions who has a huge exposure to the U.S. markets, and so it could affect their future directions. But overall commitment to the net zero or energy transition will continue to be there for their priorities. So I would say, in that sense, their kind of overall strategy will continue to be aligned with the Paris Agreement.
When it comes to the energy demand that you're foreseeing here in Japan, we talked a little bit about nuclear reactors, but of course we do have to power the future of artificial intelligence. I recently spoke to Rakuten's Miki Mikitani, and he was telling me that perhaps artificial intelligence can also help with energy efficiency. Take a listen.
Sure. Well,
using AI, in general, we may be able to reduce electricity consumption. 90% of electricity we are using in Rakuten Group is coming from mobile business. Of course, we have a big data center. All these radio stations use electricity. But in 2025, we are going to reduce our electricity consumption by 20% using AI.
How does the government see the boost in energy efficiency coming from new technologies as compared to the energy that will be needed in order to power the future of artificial intelligence?
Yeah, certainly. Well, I would say that the current revising current effort of revising energy plan include that kind of constellation. Of course, we foresee that there will be kind of increased energy demand from the AI use. But certainly, the use of AI also helps reduce the energy demand through the energy efficiency empowered by the AI. So we need to look at both sides in terms of the effects of AI.
Satoshi Ikeda, good to have you with us here in the Tokyo studio. Chief Sustainable Finance Officer at Japan's Financial Services Agency. We do have more ahead on the Asia trade. This is Bloomberg. Stocks in India have tumbled to their lowest level since June, with weak corporate earnings this season offering little hope to investors betting on an economic recovery. The nation's equity benchmark was among the region's worst performers after President Trump's inauguration. Investors' focus is now turning to the federal budget due at the beginning of February. The chairman of one of India's biggest conglomerates, JSW Group, says their strategy under the Trump presidency is to keep investing despite the unpredictability. Speaking to Bloomberg in Davos, Sajan Jindal also told us India has been falling behind on growth.
I think since the COVID, there has been a big setback to the world order. And it's taking time, though India did extremely well under the government of Mr. Modi. We did fiscally extremely well to maintain our inflation and as well as our rupee devaluation. We have handled it pretty well. But on the growth front, I think we have lagged behind, and we need to be upwards of 8%, if not double digit.
Do you have any recommendations for the Prime Minister or the Finance Minister as the budget comes up?
I mean, I'm sure she has many better
suggestions
advisors.
From industries?
Yeah, but from a suggestion point of view, I think we need to invest more money in infrastructure, because 1 rupee invested in infrastructure gives multiple returns to the economy. So the government must invest heavily into infrastructure and must double down on infrastructure spend.
Right. As you watch the headlines emanate from President Trump's inauguration, all the conversation around tariffs, potential no tariffs, the trade war with China, the no trade war with China.
Yeah.
What do you make of this? How do you strategize your business growth plan, activity over the year, given this volatility?
So two things. One is that it's Mr. Trump is very unpredictable, right? Nobody can predict. Probably he himself cannot predict himself.
Sure.
In the morning he will wake up and he'll probably tweet something, and the whole thing changes, right? So he's a very because he's a very different kind of a person, and good for him that he's been very successful. So that's him. But as far as we are concerned, I am concerned, our group is concerned, we will continue to invest. We don't. We are a long-term player, and I'm a big optimist on India. I believe in India, and I believe that India will be a developed country sooner than later.
It's JSW Group Chairman Sajan Jindal speaking there to Bloomberg's Menaka Doshi in Davos. Okay, let's take a look at how futures are shaping up as we look ahead to the China Open at the bottom of the next hour. We do have futures looking a little bit softer. Of course, there has been some news flow this morning. Trump saying that his threat to impose 10% tariffs on all Chinese imports still on the table. This isn't to do with the trade surplus. It's everything to do with China's role in sending fentanyl to Mexico and Canada. So tariffs tariffs still on the table, might come into force on the 1st of February. Also watching tech stocks, of course, after the announcement of Project Stargate, a $500 billion investment potentially over the next 4 years. We've seen those big moves from Softbank. Also keep an eye on TSMC, Unimicron in Taiwan, some China and Hong Kong names to watch as well, Foxconn Industrial, Unisplendor among others. The Hang Seng Tech Index has had a pretty good week. That is it from the Asia trade. Our markets coverage does continue as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China show up next. This is Bloomberg.